Before we start the show, please don't forget to subscribe to ClimateTech with Kentaro on your favorite podcast app if you haven't already. While you're there, you can also rate and leave us a review. Help us reach more listeners and build a community of climate tech enthusiasts and problem solvers. Thanks for your support, and now on to today's episode. I was told that you would grace us with your best Bono impression with his great Irish accent of what that's like in the investment committee, so the floor is yours.
There is no way that I am going to try to imitate Bono, because he will pick it up, he'll hear it, and I'll never hear the end of it. So I respectfully decline.
This is Climate Tech with Kentaro, a podcast featuring the brightest minds and most influential voices in climate tech. I'm your host, Kentaro Kawamori. Impact investing is one of the big topics that we'll be earnestly covering on the podcast. And I don't think there's a more suitable way to kick us off than a conversation with Steve Ellis. While Steve's track record and reputation as a visionary and operator precede him, let me do a quick rundown. Steve Ellis is the co-managing partner of the Rise Fund. The Rise Fund was founded by leading global investment firm Tpg in partnership with Bono and Jeff Skoll. And yes, we're talking about that Bono. Prior to joining Tpg as managing partner in 2015, Steve was the CEO of Asurion, the world's leading provider of tech protection services. And prior to that, Steve also served as the global managing partner of Bain & Company, where he worked for almost 20 years. In this episode, we talked to Steve about how impact investing is evolving, why the Rise Fund was established, and how they're driving large-scale positive impact through their portfolio companies. Full disclosure, TPG is an investor at Persefoni, and Steve is one of our board members. Oh, and before we get into it, please don't think I let Steve off the hook with his best Bono impression. Stay tuned for what I would call a Climate Tech with Kentaro exclusive.
The history of this fund platform is interesting. The origin story is important because it's a big part of what motivates us. And it's why I decided to join TPG. You know, if you dial back to 2015, the impact investing industry was a cottage industry. A large impact investing fund might be 100 million of total assets under management, and largely focused in the venture space, you know, oftentimes more geared to the developing markets. And that just didn't make any sense to us. We felt like the world had a number of sectors where there were very active scaling companies that needed growth equity, that needed the kind of support that a platform like TPG could provide. But there weren't any large-scale dedicated impact platforms out there. And we didn't really understand why. So we dug in, tried to understand what the barriers were, why institutional investors had not come into the market at the scale that it required. And as it turned out, there were sort of three things that were missing. One, there was not a legitimate, accepted, rigorous impact assessment, measurement, and reporting regime. Second, there was a perception that as soon as you said impact, that meant that you were going to have concessionary returns.
For context, a concessionary return means a return on an investment which sacrifices some financial gain to achieve a social benefit.
And if you're a big state pension plan, you have a legal fiduciary obligation to maximize returns for your stakeholders. So that was a big issue. And third, none of the large platforms that had the capacity to bring this kind of solution to bear had found the will or the skill to actually implement and execute a strategy like this, because it requires meaningful investment, it requires a global platform, and it requires leveraging the power of that investment prowess and long history of knowing how to do great investing. And so that informed how we built the Rise Fund.
Alongside TPG Rise Climate and Evercare, the Rise Fund is powered by TPG and is part of its impact platform. TPG's impact platform demonstrates the investment firm's commitment to driving both competitive returns and measurable benefits to society at scale.
You know, we ended up creating a different brand which, leverages all the power of TPG, but makes it clear to impact entrepreneurs that this is a serious, dedicated strategy that is really at the center of how TPG thinks about its obligation to society and the planet.
And that strategy has worked well.
We launched the funds back in 2016, the first Rise Fund, which was a $2 billion fund. We deployed that over the course of about 3 years, raised the second fund, which was $2.2 billion. And we've been through the first two funds now, which are performing extremely well, and I think have proven that you can now do this at scale. And now we're in the process of raising the third Rise Fund, which has a target of $3 billion. But about a year and a half ago, we saw a growing demand and increasing number of opportunities in the climate conservation space. And in particular, these opportunities demanded oftentimes much larger investments. Our typical investment in the Rise funds was around 75 to 150 million. And some of the climate opportunities we were seeing were requiring really significant equity infusions, on the order of 400 or 500 million up to $1 billion. And so we felt like we needed to have a different vehicle in order to take full advantage and to ensure that we were achieving our original mission for the Rise Fund, which was to demonstrate to the world that this is a legitimate institutional asset class where you can invest to do good while also doing well. And so we raised a $7 billion dedicated climate fund. So now the platform, collectively has about 14 billion of assets under management. And that's before we complete the fundraising for Rise 3.
Here, Steve dives deeper into how the Rise Fund strategy was architected.
We had really a triple bottom line. People oftentimes talk about the double bottom line, but the first objective was, of course, to generate great returns for our limited partners. If we weren't successful in doing that, the strategy would have a very short life. Obviously, we also wanted to make sure that we were driving real, demonstrable, persistent, positive impact through the work our companies were doing, and that at an aggregate level across our entire portfolio. And to be able to measure that, report it, which we do every year. But third, and very importantly, we wanted to catalyze the industry. We wanted to crowd in more private capital to be focused on addressing the world's biggest problems. And while it took a little time for some of our peers to really invest in building meaningful, large-scale global platforms, I think we've hit the tipping point finally. And I think this is now becoming a truly legitimate asset class, and it's growing at an exponential rate, which we think bodes well for the ability of private capital to address some of these huge problems we have.
Really eloquently broken down, and there's a bunch of stuff to double click on this. And one of the things I want to go to immediately is that, there was, and I think in still some cases, the perception that impact investment or climate investment means concessionary returns in some cases, or in all cases, right? Some people have that perception. And you mentioned, being back on the fundraising trail now for Fund 3. How have you seen that conversation change? Does that still come up? And, does it just come up less frequently? Does it come up differently? What does that look like today?
Yeah, there has been a lot of progress. And I would say that if you were to put this in some sort of sports metaphor, like the innings that we're in here, I think we're probably in the third or fourth inning.
Steve, we just finished March Madness. You should have used the bracket example instead.
That's right. Okay, so we're probably just coming up to halftime.
Okay.
So we have made real progress. The number of large institutional platforms that have dedicated impact strategies has increased meaningfully. That said, there are still a shocking number of huge pools of capital out there who are still just learning about it, literally asking us, as almost everyone did back in 2016, what is impact investing? How is it different than ESG? So how concessionary are the returns? And, we have to educate them on the fact that there is a proven model out there to, be able to do good and do well at the same time. So it's a long road to educate the global private capital markets. And I think we've made substantive progress, but honestly, it's still pretty early in the journey.
If you look at the public markets data on ESG funds and sustainability funds, they're attracting billions, within weeks of formation. Mm-hmm. But what do you think the primary difference is on what seems to be a pretty fast inflow of capital into sustainability-linked public funds versus in the private markets? What do you think the biggest differentiator there is?
Yeah, well, I think there's two primary differences. One is those are largely ESG funds, meaning that they construct their portfolios based on excluding bad companies. And there's been a growing number that are actually focused a bit more on choosing those companies that are particularly impactful themselves, which is a different way. It's an inclusionary as opposed to an exclusionary portfolio strategy. But the vast majority of those ESG funds, the ETFs, index funds that have been put together are just generally avoiding companies that are doing harm, for instance, to the climate. That's a very different strategy than doing impact investing, which is finding companies that are what we call collinear, meaning that what they do to drive revenue and profit actually creates net positive social and or environmental good, and that good can be measured and it can be tracked. And, that's a subset of, the world of investment opportunities out there. It's a growing subset because of the importance that's being placed on the climate impact, the diversity, equity, and inclusion dynamics, this broad agenda of corporate social responsibility, which is driving behaviors of the people who are buying goods and services across, all economies around the world. And so the sort of hydraulics of the economic incentives to be more responsible and more sustainable are accelerating. Again, still relatively early days, but that's advantaging companies. It's creating a tailwind for companies who are focused on that as the core of what they do in their business. And so I think it is taking a little bit more time in the private markets to build up the confidence in large-scale platforms that can deploy the kinds of capital those institutions have. And, the public markets have a easier time of it because they can just do exclusionary, they can do ETF, they can construct it very easily, bring it to market. And, those are great. That's an important contribution to the broader effort, but it doesn't exactly have the precision and the impact standards that a platform like ours does. And that takes more time to build, more time to mature, and more time to create the proof points that give institutional investors confidence to really lean in.
Makes a lot of sense. And it's also a timely discussion because TPG, of course, went public as a firm in January, I think it was.
That's right.
And, now you sit at this interesting intersection where, of course, you are a steward of so much of this private capital, but you're now also exposed to the public markets, around the firm's float. And, of course, you mentioned some of your peer sets earlier. Does that change anything, when you're out on that fundraising trail, which is a different one, right? Because you've got the one raising capital for the funds, and then you've got now one for the public market investors. How do those things connect, right? Has the rhetoric around ESG different in that set of fundraising discussions versus the private capital markets one? Any interesting observations from that experience?
Yeah, I think like any public company, the focus that public shareholders have on ESG broadly is very prominent, and it's growing, which is encouraging. And, at TPG, we've had a very, very robust and rigorous ESG program for decades. And we're very proud of that. And that was a frequent question, obviously, as we went through the process, the roadshow process, and introducing ourselves to public shareholders. The impact strategy was evaluated just as every other business line in TPG was, which is, do you have a leadership position? What's the growth potential of that business? Is it differentiated? Does it deliver great returns? And so it was evaluated purely on its ability to continue to generate great economics for the public entity, but certainly it also highlighted an important facet of what TPG is all about, which is our commitment to doing good while we're doing well for our shareholders. And I think that stood out. I think it highlighted a bit of a differentiation in the culture and the sense of mission and purpose that lies at the center of TPG.
In parallel to the Rise Fund, Y Analytics was created to provide best-in-class insights and tools that improve capital allocation decisions. Y Analytics is a public benefit corporation, and Marianne Hancock leads the Y Analytics team as its CEO. I'm purposely not pulling on the thread of your point number one earlier, which was when you formed the fund. Problem number one is there wasn't a legitimate impact assessment and reporting framework and methodology out there. And you guys have done such great work through Y Analytics and helping create many of those things and being involved in standard setters and those sorts of things. I'm going to park that because naturally I need to get Marianne on the podcast and dive deep into that because that can't be done justice in a few short sentences.
Well, I'm very glad that you didn't ask me to stand in for Marianne. That would have been a failure from the outset.
She is a tough act to follow, no doubt.
Yes, she is.
Marianne is a part of a team of incredibly accomplished sector leaders that is moving the Rise Fund's mission forward.
You know, the leadership of the platform is a team sport for us. So it's myself, Maya Korengel, who's my co-managing partner, who was one of the leading voices in the impact investing industry long before we launched Rise. And she was one of our first really critical hires and has been a force of nature. Marianne Hancock, who you mentioned, who leads Y Analytics. She's a very important member of the leadership team. Of course, Jim Coulter, who's the founder of TPG and co-founder of TPG, and he has now dedicated the vast majority of his time as he's moved out of the CEO role into the Rise platform. And he plays a very, very important and prominent role, particularly on the Rise Climate side. And we have Mike Stone, who has been our CIO from the very beginning, who plays that role across all Rise funds and the Rise Climate Fund. And then we, of course, have Hank Paulson, who came in as the executive chairman of TPG Rise Climate and is a very active participant in our investment committees and plays a very critical role. And then, of course, Bono and Jeff Skoll were really co-founders of the Rise Fund back in 2016. And they don't play an active role in the investment committee, but they chair our founders board, or what we now call our global advisory board, which has a number of very important voices and leaders in the world of philanthropy and impact who have been an essential sort of advisory board and a platform that we've used to support our sourcing around the world.
Well, like we talked about many times, it's a crazy exciting team. I mean, not to underplay your background as well. I mean, your ability to have seen so many things at Bain from that perch, is going to bring a really unique perspective to the table. And perhaps most importantly, when we were scheduling with your team, I was told that you would grace us with your best Bono impression with his great Irish accent of what that's like in the investment committee. So the floor is yours.
There is no way that I am going to try to imitate Bono, because he will pick it up, he'll hear it, and I'll never hear the end of it. So I respectfully decline.
All right. Well, I had to try. All right. So now we know the cast of characters. We got impact, but let's focus on Rise Climate and, where within, thematically do you play in terms of stage, preferably? And then, thematically within climate, what's most interesting today, right? I don't think we necessarily have to go into like a hard thesis because it's evolving so fast. I think everybody recognizes that. So maybe give us a little bit more of, what's most interesting that you guys are looking at today? What are you tracking to the extent you feel comfortable sharing that?
Yeah, well, I think probably the most important point is the one that you led with, Kentaro, which is this is an extraordinarily dynamic space. The pace with which new technologies, new business models, new regulatory regimes are all converging at the same time with a growing sense of urgency, which is what's so essential to make the progress that we need to make over the next decade, that, I'm not sure there's really a corollary any of us have ever seen in the, cumulatively hundreds of years of investing experience and business experience across our leadership team. And so, we're very humble about, our ability to predict exactly how this is all going to evolve. But thematic investing is always the best way to manage through a very dynamic and potentially turbulent investing landscape. So we're being very focused. We have, sort of 4 sectors that we focus on in the climate space. The first are sort of traditional renewables. And, that continues to be a fascinating and it's sometimes overlooked domain because there is an enormous amount of new technology being introduced that are continuing to drive down the cost per unit to produce renewable energy. And particularly as we look at some of the new storage and grid management solutions out there, we think there's a long, long way to go before we've tapped out what is possible with renewables. We also are looking at decarbonized transport of all forms. So not just EVs, but eVTOL, which we do think that, if you look at the contribution that air travel makes to GHG emissions, we have to come up with a solution there.
If you listen to our episode with Dan On of Clear Vision Ventures, we talked a lot about EVs, or electric vehicles.
And so we're looking at, all forms of transportation being electrified, and not just the vehicles that are being produced to do that, but all of the supporting technologies, not just batteries, but, all the forms of enabling technologies that are required, to support the grid, to support charging, to support the ability to store energy and increase battery life. So obviously a huge and interesting domain where we're very active. The other place is looking at alternative fuel sources, hydrogen, ethanol, particularly agriculturally driven new alternative fuels, particularly for aviation. That's a very important source of transition fuel that we're going to need to get through this. And there are some really, really interesting companies out there that are getting to real scale. Carbon capture is another area of all forms, direct air, as well as capturing, carbon at the source of production. Again, a very, very important transition technology. All sources of greening industrials. We've invested in companies that are turning organic waste into a polymer that can be blended with polyethylene and polystyrene to make plastic basically carbon neutral or carbon negative, as an example. And, all kinds of recycling and circular economy solutions that are, holding the promise to dramatically reduce waste. And then we have a number of areas where we're looking at enabling technologies that are important for supporting this transition. Persefoni is a great example of that kind of company, usually technology that is helping to accelerate the drive, not just to hit regulatory requirements, but to actually manage efficiently the transition to a more sustainable footprint for large enterprises around the world. And we think that that's a massive opportunity that's really just in the very early innings.
Well, it's a very small list of, very easy things to invest into and build. So I'm sure it's a walk in the park for you guys.
Yeah, we, any one of these sectors, have 15 to 20 subsectors in them, which, so one of the biggest challenges, quite honestly, in this whole journey to create a scale climate fund is focus, because, you could deploy, over the course of the last, 3 years, I don't have the count, but it is in the tens of billions, if not hundreds of billions of dollars that have been committed to battery technology, as an example. And the question is, at this point, if you actually built out all of the capacity that has at least been planned for and to a large degree funded at this point, even in the most aggressive projections for EV penetration of all kinds, that exceeds the demand. So that is a domain that you have to be very careful about, right? Because it's there's an enormous amount of enthusiasm, but capital markets tend, particularly in the early stages of technology development, to over-rotate, and things get overcrowded. And so it's tough to navigate. You'd love to be, have a major position in a battery manufacturer, but the truth is, those can be perilous investments when they experience the kind of enthusiasm that has been the character of that market in particular. So there's all kinds of derivative investments off that. For instance, we made an investment in a utility grade storage business that is taking advantage of all the advances in battery technology, but really focusing on how you build large scale storage into the grid in an intelligent way that allows you to deal with the peak demand issues that you run into when you migrate more of your grid to intermittent renewables. So huge problem. We're not betting on coming up with the next, silicon anode technology for the battery. We're betting that somebody's going to figure that out, and we're going to have the system that enables a grid to take advantage of it.
Yeah, like you said, there's a whole value chain, right? There's all these subsectors within these gigantic industries that are just being birthed. And to your point, the EV and the storage example is a great one because it's this combination of technology getting developed far enough, consumer and customer adoption going far enough, de-risking event just from a straight investment standpoint, right? And then you open up this new class of investors, and in those cases, even the retail. And it immediately reminded me, as you were talking about that, in the IPCC report news, that you probably saw the endorsement for the first time of carbon capture. IPCC stands for the Intergovernmental Panel on Climate Change. It's the UN body responsible for assessing the science related to climate change. And it actually saying specifically now, direct air capture now has to be a pivotal role, right? And it was like, hey, we can't rely on direct air capture. It's this thing we're tracking. And now it's full scale moved into, to your point, policy, science, even regulatory alignment, because the Biden administration is creating incentives for direct air capture. And now it's gone very quickly from this nascent technology, which from a technology standpoint, it still is, but also market adoption and acceptance. And now market is very quickly accepting it. And now, we're going to see that same sort of phenomenon. I was super excited to hear about the organic waste into polymer. I feel like we, especially in the fossil fuel discussion, we just don't talk about plastic enough, right? Because, everybody loves to talk about oil and gas or around energy independence or the cost of fuel, but we have a crazy addiction to plastic as a planet, right? And 10% of global oil production goes into plastics production, which is a crazy, crazy number.
Yeah. And it's funny, but people don't realize how many things are made out of plastics. Everybody focuses on the reusables, right? The cups and the straws, which of course make up a big part of the challenge we have in the ocean, which is something we have to address. And we've been investing in companies that are helping to try and solve that problem with biodegradability and reuse. But the truth is, plastic is everywhere. And, some of the applications, whether it's a garbage can or a pallet, or building material, there are all kinds of categories out there that with the technologies that are out there today, there are some leading technologies. And of course, the challenge is you got to scale massive manufacturing facilities to be able to address, global demand. And so one of the challenges is, you've got a technology that's been developed in a lab. You're pretty confident that you can scale it, but you're not really sure because there's a ton of chemistry that goes into, these reactors that convert waste into a polymer. But you have to believe, do as much science and production and manufacturing diligence as you possibly can, get the experts in, make sure you understand the limits of the chemical reactions that are taking place in the reactor, and then be confident that you can actually build a facility, somewhere within the budget that's been set and do it on time so that you can meet, the demand, and time that in a way that you're making commercial commitments to large, manufacturers, some of the largest consumer packaged goods companies or shipping companies or building companies in the world, and make that all come together. It's difficult. It's really hard because you're doing things that people haven't done before. This is what makes the investing, particularly challenging, where you have to go in with a very, very clear sense of where the risk is and ensure that you have every possible mitigant in place, or you can put in place, to make sure that you can get these solutions to market, because we've got to do it, and we have to do it quickly. And some of these solutions, the plants, the proven scale production technologies, are going to take 3, 4, 5 years at times to get to full production scale. And those are long lead times for a growth equity investor like us. But we know that we have to find a path, and we know we will, because we're finding companies that have absolutely have really managed through most of the technology risk, and it's really just a scaling and commercial challenge from here. And that's where our skills are particularly well suited.
Well, you're doing super important work, and that is why I prefer software, because after having been in the energy industry, having to become an expert across science, logistics, manufacturing all at once is insanely hard, as you point out.
Yeah, and the great thing is that software is just easy. It's just, it's like falling off a log. So
I tell my engineers that all the time, right? I just tell them,
exactly.
I say, hey guys, can't you just write 2 lines of code for this? And they're like, face palm, and they're like, God, you're an idiot.
It's just zeros and ones at the end of the day.
Exactly. So, like how many permutations can there be?
Exactly.
They're going to skewer me after listening to this. They're going to say, you are such an idiot. Well, great. This has been super enlightening. We always like to end on any message to the listeners, whether it's on behalf of TPG, who should reach out, or just broader climate community. What message would you like to leave us on?
The people listening to this podcast, I think, are the people who are on the leading edge of, probably the most profound challenge that humanity has ever faced. And at this moment, particularly as we look at how divided the world is on so many dimensions, this is actually a beacon. This is, in my view, an opportunity to find common ground, a common sense of purpose that transcends political boundaries, religious boundaries, national boundaries. And to me, it's going to require that in order for us to make the progress we need to make at the pace that the current trends and the science demand. So I think it's just a call to action. And I think all of us, from the choices we make in the products we purchase, all the way up to how we focus our own professional careers and where and how we want to contribute to this massive global challenge, is we all just have to do everything that we can and keep the sense of urgency high. My biggest fear is that we're going to slip into some sense of complacency around speed and pace, because this stuff is hard. And if we hit an economic speed bump, if we end up going through a recession, that's going to be the test, is whether or not we can maintain momentum, we can maintain persistence to ensure that we don't fall behind further, because we are already behind. So, I'm preaching to the choir on this podcast, but, I think this is the group that has to lead.
Well, the choir still needs to be preached to, and yes, I think your point on the need for speed is spot on. That is what the IPCC report again reemphasized. Every step of the way, the science keeps saying the need for speed is paramount. Well, thanks for that call to action. We do have one last call to action for you. You're not going to get away so easy. We had your team reach out to Bono's team while we were recording, and they said, no, it's fine for you to do the imitation. So, floor is yours.
You are very good, Kentaro. But as much fun as it would be to lay out, my best Irish accent.
There we go. We got a little taste.
I got a little taste. That's about all. That's about all I'll give you.
I'll settle for that.
Yeah, that's right. So we'll. I'll see if I can.
I'm not going to let you off that easy. I'll get you one day.
Okay, I know you will. Well, you just have to ask me back.
I hope you enjoyed my conversation with Steve as much as I did. If you're interested in learning more about the Rise Fund and the pivotal work their portfolio companies are doing, please visit therisefund.com. Before we go, please don't forget to subscribe to ClimateTech with Kentaro on Apple Podcasts or whatever platform you listen on. Thank you all for listening, and I'll catch you on our next episode. ClimateTech with Kentaro is produced by our incredible team at Persefoni and Hueman Group Media. Our theme music is by Guest House. And if you want to learn more about Persefoni and our climate management and accounting platform, please visit our website at persefoni.com.